Hi, friends. The older I get, the more I see that investing isn't just about numbers, it's about seasons. The goals I had at 30 aren't the goals I have at 60. And yet, most of us are told to just invest without ever being asked, what stage of life are you in? And what do you need your portfolio to do for you? In this issue, I want to reflect on how goals shift as we move through life and why aligning our portfolios with those shifts may be the most important form of risk management we can practice. Investor journey, early growth years. When I first started investing, growth was everything. I had little capital, but plenty of time. That combination gave me the ability to take risks I couldn't take later, whether in tech stocks, emerging companies, or more recently, crypto. It occurs to me now that the advantage of youth is not knowledge that comes later, but time. Mistakes cost less when we have decades to recover. Compounding works its magic in the background, turning small amounts into large ones if we're patient. But there's also a danger in youth, mistaking growth for security. I once thought that as long as I chased high returns, the rest would take care of itself. What I've learned is that growth without accumulation leaves us vulnerable. Unless we steadily convert some of those gains into more stable assets, the cycle eventually resets, and paper wealth can evaporate as quickly as it was made. That lesson came to me late, but it's one I carry now into every decision. Approaching and living in retirement. By mid-career, most of us begin to shift. Growth is still important, but the stakes change. We're no longer building from nothing. We're protecting what we've earned while preparing for a future without paychecks. For me, this shift became very real in 2018 when I took over my retirement portfolio, just as the market was entering one of its seasonal downturns. I learned quickly how it felt to live off investments, not wages. Every dip in the market wasn't just numbers on a screen. It was rent, groceries, and healthcare. That's when income and protection became as important as growth. Bonds, dividend stocks, and insurance-based products stopped looking boring and started looking wise. Precious metals, which I once dismissed as dead money, revealed their true role, not to grow my wealth, but to preserve my confidence during downturns. Now, as I look toward the years ahead, I see the balance shifting even further. In retirement, peace of mind is the greatest return of all. Income assets and protective assets carry more weight, not because growth no longer matters, but because the ability to stay invested depends on feeling secure. It occurs to me that the portfolio isn't just a financial tool, it's an emotional one. When it's aligned with our stage of life, it steadies us. When it isn't, it shakes us. Investor Skills Corner. This issue's glossary highlights some of the concepts and terms referenced in this newsletter. 1. Growth investing, targeting assets with high return potential, e.g. tech, crypto, often with higher volatility. 2. Accumulation phase, the stage where investors steadily build assets, reinvesting gains and contributions to grow a base for retirement. 3. Income investing, focused on generating cash flow through dividends, bonds, or insurance products, especially in retirement. 4. Protective assets, gold, silver, or real estate designed to preserve value when risk assets fall. 5. Sequence of returns, risk, the danger of poor market performance early in retirement, which can deplete portfolios faster when drawing income. Final thoughts. Every stage of life brings different financial needs. Growth is easiest when we're young. Protection becomes critical as we approach retirement. Income sustains us once we're there. The mistake is thinking one stage's strategy applies forever. The truth is more dynamic. Portfolios evolve with us. So I leave you with this question. Is your portfolio aligned with the stage of life you're in or the one you wish you were still in? I look forward to your comments. I respond to every email I receive. P.S. If you'd like to learn more or get involved in our Friday discussion, send me an email. I'd love to have you join us.